Are you missing the 3 things that actually tell you where the market is going every day? Today, I will show you how to build a complete intraday plan using order blocks, liquidity, and structure. We start with how the pros find true structures, then dive into the exact liquidity zone that paid me a 10 RR live trade. Today, I'll break down my whole process step by step. So this is where they told you price moves, right? From a high to a low, external structure. From this range to this range, internal structure. We made a break of market structure. When we came back to this breaker block right here, we saw what? An immediate decline of price. We say here, since market is respecting order blocks and breaker block, let's mark out this breaker block to trade to the downside. And can you see what? We are rejecting off this breaker block, and finally market will took you out. You see, maybe the problem is from this breaker block. Let's use what? An order block to trade to the downside, and you fell again. And you say probably this is a market structure shift today. We are no more in a downtrend, we are in an uptrend. Let me mark out this order block. But can you see what? You fell again. This is just Monday. You've taken 3 losses just from what? 1 pair. But a trader that marked out this particular order block right here, entry here, stop loss above here, this is a take profit for the trader, because of here is the highest probability intraday setup. To get the highest probability what? Market structure, you must what? Master these 4 things here: value structure high, value structure low, previous high, and what? Previous low in the market. This is your value structure high, value structure low, this is your previous high, and this is your previous low. I'll explain each one of these. Value structure high is a high that what? Raided a previous high before what? Making a break of market structure. Can you now see why this trade worked? It's a market formed with intention, not just patterns out there. Our price took out the liquidity of early what? Buyers in the market. Look at this GBP/USD trade I sent out to my Telegram community while I was making this video. Can you see how what? We raided this low before making this market structure shift? And can you see how this particular order block here what? Moved. Currently it is running a 1:4 risk to reward ratio. So are you currently using this? Let me know at the comment section. What's a valid structure low? Is a low created after what? A value structure high is created. After price action created this value structure high, this value structure low was created, sweeping this previous low in the market. This is good 1 hour time frame. Can you see what? We are in a downtrend. We moved from what? This high to this low, from this low to this high. We made a break of market structure, sweeping this low. And can you see what? How we raided this previous high in the market. Previous high is a high that didn't raid any high before making a break of market structure. Can you see this high right here? Wasn't able to what? Raid this particular high before what? It made this break of market structure, guys. Moving forward, when we raided this previous high, we what? Moved in this external structural movement before breaking this low, giving us a break of market structure. We name here a value structure high, and we name here a value structure low, guys. And we mark out our order block right here. We make our entry here, stop loss above here, and TP at this value structure low. And this gave us what? A 1:7 risk to reward ratio, guys. I want you guys to know that there are people that actually sold from this particular order block right here in the market. But can you see what? They failed. Because of here is what? A previous high. And here is what? A previous low, guys. You have to watch Unlock the Secret Market Structure Strategy to understand this in depth. Again, in this our trending range right here, we had what? Another order block right here. Why did this order block fail and this one worked? Because not every order block in the market works. How can we find higher probability order blocks? Higher probability order blocks are specific zones in the chart that show a strong likelihood of price reversing from them. A higher probability order block must have what? contain a fair value gap, used only once, and must be from a premium if you want to sell and a discount if you want to buy in the market. What is a fair value gap? Is when the low of the week of the first candle, this is our first candle here, is the low of the week of it, don't lap with the high of the week of the third candle. This is second, third candle, and this is the high of the week of this third candle. Can you see there is no gap between them? What this means, when smart money push price to the downside, they didn't completely fill their orders right here before they made this break of market structure. What this means is that what large orders are what remaining here. So the remaining sell orders sitting right here make our order block what a higher probability order block. Can you now see why this order block right here worked? Because it had what this fair value gap. Look at this one is to what 5-hour trade GBP/USD I sent to my Telegram community here. It has this fair value gap in it. I'll show you how to build a complete intraday plan in a moment. If this is helping, show some love, like and subscribe right now. Another thing you need to learn to make an order block a higher probability one is it must be used only once. Assuming before we made this break of market structure that we made here, price action came and tapped this order block right here before going to the downside. Trading from this order block will be wrong, guys. Someone watching me will say, but Victor, know this order block right here met all our rules, but it still failed because of what? Number 3, it must be from what a premium if you want to sell and a discount if you want to buy in the market. Idea behind discounted level is what buyers will always want to buy at the cheapest price in the market. Imagine you want to buy a house worth $500,000 and immediately the house drops and you find the same house for what $450,000. That's you buying what at a discounted price. You're buying the same value but what less money. So smart money traders will always wait for the lowest price level so that they'll get the most value in the market, which is what below 50% of your fib level. So we have this example here. If you want to sell, the most expensive level or the premium level is what above this 50% zone, and that is why this worked and this failed, guys. And this is premium zone. Watch ICT A+ checklist to understand this more. Another powerful thing you need to learn to be unstoppable in the market is what? Liquidity. Liquidity is something we put inside our trades for it to be able to move in our direction, just like we will put fuel in our car so that it can be able to move. How can we map these guys out? Another name for a liquidity zone is called an inducement zone. An inducement zone is what? The first pullback created after this break of market structure, guys. This is the first pullback we created, and this is our liquidity zone or our inducement zone. Can you see that our mates are waiting to sell from this level in the market? Because here is actually the previous high and previous low we talked about, guys. Why us, the smart money ICT traders, we are waiting for them to what? Fail first so that we can enter. So as we add fuel to the engine of our car for a car to be able to move in what our direction, so as this failure right here may fuel our trades to take profit level in the market. In this our setup right here, this is our liquidity zone. Can you see how price action took out these early sellers, tapped our zone, and it fueled price to our take profit level, guys. For this trade that I took, I sent out to Telegram community that gave me 1:5 ratio running currently now. This is my what? Liquidity zone. Can you see that? I trade what I teach you guys. I don't just come here to bluff. Liquidity is like water in a river. How big the water is determines how far your boat will go. So let's look at how we can be able to build intraday plan using all this we've learned. To build the best intraday plan, you have to use the 4 T's to remember: the time frame, your time frame alignment, time of the day, and your trade management. These are 4 T's you have to check before you take a trade. Our time frame, what? We're going to be using the 4-hour. You can actually use the 1 hour if you want. I'm going to be using this 7-hour trade I took on gold to illustrate this First of all, I started from what? The 4-hour time frame gold. We can see what? A break of market structure. You can see a previous low and a previous high. You can see how it came from this previous high to what? Raid this previous low. What? A market structure shift. What? Here is a previous low. Can you see how we made this sideways movement before coming to make a break of market structure? Here is our previous high. Here is our previous low. Can you see how we moved from this previous low to what? To come and raid this previous high right here before what? We came what? To make a what? Break of market structure. And can you see this sideways movements right here? All these are liquidity zones in the market. We'll talk more about that as we move on, which makes here what? My value structure high and here my value structure low. So I'm going to be marking out my ICT optimal trade entry refined. So selling from just from here, stop loss above here, target this low, we reduce our risk to reward ratio. In fact, it will give us a 1:1.5 risk to reward ratio. That's why we have to use what? Number 2, time frame alignment. What we want is we want 15 minutes time frame if you're using the 4-hour, or 5 minutes time frame if you're using the 1 hour. So we want the 15 minutes time frame to switch in the same direction as the 4-hour. So this is what I mean. These blue lines here represent the 15 minutes time frame. Can you see that 15 minutes time frame is what? In what? A mini uptrend here. So what we price action enters, this is our ICT optimal trade entry refined. It would do a market structure shift. I'm gonna mark out our 15 minutes order block to trade to the downside, guys. Again, looking here, can you see we also have our liquidity or inducement zone right here. Let's wait for market to get here. So once market gets to this level, we move towards our 15 minutes time frame. From the 15 minutes time frame, we can see what? Mini uptrend that broke market structure into this our zone, a low, a high. And can you see we'll move from this high to this low, giving us a market structure shift, guys. I'm going to mark out an order block right here, and here can be my liquidity zone, guys. Made my entry at this consequent encroachment of this order block, my stop loss both here, and take profit level. I will start getting this range here, guys, and it is actually a 1:7 risk to reward ratio. Let's see how the trade unfolds. Once price action what gets to your entry level, you confirm what the time of the day. It is simple. You just have to trade to a London session or New York session, and if you're trading gold, you can actually add Asian session to it. Okay, we can see price action what moved up a little bit, almost at our stop loss level before what started moving in our direction. Once price action start moving in your direction a bit, what kicks in is what we call trade management, guys. Shout out to Alade Samson Mayowa. Said that I should make video about my own trade management strategy. So in trade management, you just have to watch the structures the market is creating for you. Can you see it created this structure for us here? Once it's created this structure, what you have to do is what? You move your stop loss from here to a little bit above your entry, or your entry exactly. The smart money always know, they know the entry points. Now sometimes you see market tap this entry and fall back, and again you don't want to move your stop loss to this level in the market, because of sometimes it might hit that level and move in your direction. Let's see what the market want to do. Okay, it is moving in our direction, and that is a full take profit, making it a 1:7 risk to reward ratio, guys. Can you see that if you actually would put your stop loss here now, you would have missed out in a lot of these movements. I'm Victor Snow, and this is Trading from the Soul, where I take ICT complex concepts and I break them down in a way even a 5-year-old can understand it. If you got value from this video, show some love, like and subscribe. And besides, you don't want to miss out on future videos. Always tell me topics you want to see next. It helps me make better videos. And if you're serious about learning smart money concepts and stop blowing your accounts, this is where you start. Complete smart money trading course. I put together this video and every other smart money video in a comprehensive way so you can understand properly. The next video in this series is ICT A+ checklist. See you guys there right now.